Welcome to Real Vision. I'm Jim Bianco, and I have the great pleasure of talking to Sean Lippel of FinTech Collective. We're going to go down the rabbit hole of a couple of TradFi guys that have discovered DeFi and crypto and how we got there and what we think of it. So, Sean, welcome.
Great to be here. Thank you for having me.
Yeah, so let's start with the basics. Tell us about your background and tell us where you came from and how you wound up at FinTech Collective.
Absolutely. So just by way of background, Sean Lippel, partner at FinTech Collective. We're an early stage venture capital firm based out of where I'm sitting right now in New York City. I've been heading up our digital asset effort since 2016. So to take you back into my brief professional history, I started my career in institutional finance at Credit Suisse. And during that time, I covered financial services and technology companies as an investment banker. I had the pleasure of starting my career right into the financial crisis of 2008. So I had a front row seat of seeing the pitfalls of a financial system that was not built from first principles. I'll never forget that first Christmas party where half my analyst class was laid off, made for a really interesting experience. And then just sort of running around the trading desk, just figure out what our exposure was to Lehman at the time, because no one knew. And then, on the other side of that, just seeing the avalanche of sort of regulations that sort of the bank was facing, and just, former business lines that used to be profitable that in, a more regulated environment were no longer so. And at the time, as mentioned, I was covering technology companies, so I had the juxtaposition of seeing the advent of sort of mobile and the cloud and just what that technology innovation was unleashing, and kind of had a realization kind of early in my investment banking career that unless I want to be on the wrong side of history, it probably made sense to move over into the technology field. But the probably more interesting background is that I spent various periods of my 20s as a ranked online poker player. And I started a few adjacent businesses to that, one of which actually used a unique set of data analytics to rank and back other poker players. So little known fact, but most poker players are actually backed by other poker players. So we were kind of basically crowdfunding for poker players. And at the time in 2011, 12, you guessed it, poker sites were using Bitcoin to cash you off, and we were sending players sort of their funds in Bitcoin. So really that was the genesis of my interest in sort of cryptocurrency. And I like to think of online poker as sort of like the first original metaverse. Now that term gets thrown around a lot, but it was the first sort of community where people were sitting anonymous. You kind of knew who their avatar was, but you didn't know who they might be in real life. And then for the last 6 years, I spent my time here at FinTech Collective just getting schooled in the art of company building and institutional investing. So really it's the confluence of those three things that sort of led me down sort of the crypto rabbit hole, and DeFi specifically is one, this background in institutional finance, two, sort of this poker background and understanding the metaverse and game theory optimization. And third is just the last 6 years in sort of company building and sort of being part of an institutional VC.
Yeah, it's very interesting you bring up about the online poker. I do think of that too as kind of like a prehistoric version of what we were going on. And there's a lot of parallels to, NetTeller and maybe Coinbase or some of the DeFi applications too that we could get into as well. This is largely going to be to a crypto audience, and we're talking to a VC fund about investing in DeFi. And I'm sure that there's a lot of people that think, what does VC bring when you can have fair launch of tokens and everything? So talk to me a little bit about that. What advantages and what skill sets and can a VC fund bring to a DeFi protocol that others can't?
It's a really fair question, Jim, because obviously we've seen a number of fair launches like Yearn and some success around those. I would say, it really depends on the entrepreneur. We've worked with tons of talented entrepreneurs in the DeFi and Web 3.0 space that do want institutional capital and thought partners and understand sort of the scale and sophistication of what that could bring. And having said that, not necessary. It's not necessary that all projects obviously get institutional backing, but there are a number of sort of benefits that I think we sort of bring to the table. But I second the notion that a traditional traditional venture capital model within crypto is probably not going to work. And it's likely why you've seen sort of this emergence of new fund managers, whether that's, us, whether that's Polychain, ACC Crypto, Powerify. And I think it's because like the reality is this new paradigm are quite different. Like the space is much more technical. It's being driven by development heavy teams. The code is open source. So this idea of like what builds durability and defensibility around a business model doesn't necessarily translate from sort of traditional VC where the tech stack is proprietary and you're sort of creating your API and someone's, licensing and paying you for it. So like we do think like sort of what succeeds here will be architected a bit differently than in the traditional world. And we think about bringing value to the portfolio across this new fund, across a bunch of different dimensions, one of which I'd say is the upgrades to these sort of what I'll call decentralized financial networks never really stop. So bringing sort of a deep fundamental research lens and then just being active in governance means a lot, right? So like as institutional investors, we don't just hold our tokens. We're obviously, putting proposals forward. We're voting on the future of the sort of protocol and what we think works and what doesn't. And then just when we think about just, bringing technical capabilities, like we employ a smart contract engineer on the team that goes quite deep. So we think about like, I don't like to use the phrase that we're building a full stack consulting arm because that's really not what we're in the business of doing, but we like to be really impactful across dimensions of like governance, liquidity mining, bringing some technical capabilities by having someone on the team that could dig underneath the hood and sort of help along that dimension. And then just like when you think about these communities, like this is what they are, it's sort of communities sovereign to the internet. Like how do we think about marketing and reaching sort of a broad scale of people and sort of moving, people forward in a holistic direction. And, we have a lot of experience doing that and sort of seeding early protocols across decentralized finance. So, and then, the liquidity mining thing is actually really interesting, right? Like the lifeblood of these networks and DeFi really is sort of liquidity at the earliest stages is like bootstrapping network effects and having an institutional partner that could bring not just equity capital or being able to buy your token, but actually bringing assets or TVL into the protocol is really important at the earliest stages because like you got to get the flywheel going and anyone who could help sort of amplify the messaging and do that is going to be differential for these new age Web 3.0 companies.
It's interesting you bring that up because in a lot of the VCs or TradFi people that I've talked to in this space really like to use the phrase picks and shovels. I want to go to the picks and shovels, and they're always focused on the chart or chain link or something like that. But you talked about a much wider net than just talking about, some of the direct applications that you can have on it. So talk to us a little bit about what it is that you're looking for in a protocol or in a project that would interest you in going to the next step and continuing to investigate it as a possible investment opportunity.
Yeah, absolutely. And I'll say this, just given sort of the nature of FinTech Collective, like we're a global asset manager and we've sort of cut our teeth as early stage investors. So we kind of invest at the early stages. So I will say 100% sort of the founding team is the most paramount, piece to that puzzle to us. Like we look quite deeply at sort of the skill set of the founders and sort of what drives them. And everything in DeFi obviously is highly ethos driven as well. So we think about things that sort of stay true to the ethos of transparency, openness, programmability, and composability, right? So founders that sort of exhibit those characteristics, but just have like a big global vision, right? That's the other thing is, what we're building here is, financial networks that are sovereign to the internet and global by nature. So having a global vision is really important when we look at sort of the protocols that we invest in. And then just thinking about sort of like, I like to sort of zoom out and think about, DeFi specifically and like what use cases are there and like sort of what's getting traction for us to look to invest in. And what I think is really interesting, if you kind of zoom out and look at the crypto market cap, like where are we sitting today at 1.2 trillion? If you look at the top 10 protocols that have some semblance of product market fit, that's about 20 billion in total network valuation or market capitalization, whatever you want to call it within the space. And where are we seeing some early signs of green shoots and where things are having lasting effects? I'd really say it's across 4 dimensions that we look at as actionable right now. So the first is kind of decentralized exchanges. So Uniswap sort of leading that as sort of the flag bearer. But when we think about sort of the broader trading of, digital first assets, being able to do it in an open custodial manner where, anyone could add a pair onto Uniswap, you could trade against it. There's no order book for a user. All that sort of complexity is abstracted and I just move from one token to the other. That is a fundamentally game-changing experience. And, bears out in the data, right? If you look at some days, Uniswap trades north of $1 billion, which may actually supplant Coinbase on a variety of days. So DEXs are certainly getting a ton of traction. The second swim lane that we think a lot about that has traction is sort of the borrowing lending space. So whether that's, Aave, Compound, Maker, just non-custodial repo markets, we're actually using the power of the technology where I actually don't have to, as we mentioned, started my career in institutional finance, I don't have to hand my collateral over to someone else to borrow another digital asset. So really, we think about that as foundationally important to DeFi and sort of the lifeblood. If you think about repo markets across traditional markets, they measure in the trillions, and sort of replatforming them using smart contracts is a fundamentally better architecture to do that. So we look at that and sort of the 10 billion plus TVL that's across those protocols. The third space that we look a lot at and sort of have an active thesis in is sort of the synthetic space. So we're the earliest backers of a protocol called Universal Market Access, which is infrastructure for developers to develop synthetics. And we think a lot about just, this idea of real-time margining that UMA does, and just a better sort of oracle system to sort of adjudicate financial contracts. Financial contracts that exist today are very specific to the geography you're in. When we think about a financial contracting system that could span sort of globally, we think about UMA as an important infrastructure, and synthetics are certainly getting a lot of traction and volume. And the fourth thing, which I'm sure we'll talk a lot more about because it's top of mind, not just for us in DeFi, but on the regulator's mind, is this idea of stablecoins and sort of replatforming the way that payments works. And today we've got over $100 billion across stablecoins or the stablecoin ecosystem, a variety of centralized stablecoins like USDC and Tether, and decentralized stablecoins like MakerDAO. But that's certainly an area that's getting traction that we spend a lot of time thinking about. So hopefully that answers the question of not just what we're looking for from a sort of team perspective, but just some of the areas of interest to us at sort of the fund level. And you're exactly right. We think, a successful fund in this space is quite nimble and is going towards where the areas and pockets of opportunities are. So, we do invest in equity, and a lot of that has to do with sort of life cycle and stage. At the early stage, these things look like traditional equity structures before anything's built, and it's just a white paper. Eventually you get to the SAFT, a simple agreement for future token launch, and eventually get to the public token market when sort of, these things reach some measure of scale. And we want to be able to invest, across the full spectrum. So the aperture is really wide from the fund level. Wherever we see 15 plus X opportunities, we want to be there.
Hey, if you like this clip, be sure to like and subscribe for more crypto-related content. Also, be sure to check out the full interview and more only on realvision.com/crypto.